Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He tells us safe haven plays were big and comments on Canada losing its AAA credit rating. Publisher of gloomboomdoom.com, Dr. Marc Faber, checks in from Thailand. He gives us his opinion on how the virus crisis is playing out and the long-term economic outlook from it. He also talks about Marxism and the pressure on the capitalist system that could result in a declining living standard. Ed Steer, founder of EdSteerGoldSilver.com, runs down the latest commitment of traders' sentiment and tells us why gold and silver prices are way below what they should be. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Aben Resources CEO Jim Pettit. We'll talk with Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Always a pleasure, Jim.
Ross, would you describe the week on the stock markets as safe haven week?
Oh, it was definitely safe haven week. I think we had a bit of a rally right into the close there on Thursday, but overall, this was a week with erosion, and as we mentioned a week ago, with the triple witching, that being the expiry of the futures contracts and the options, all on the third Friday of June. The week after that historically has got a poor track record. Not so much that it falls a lot, but it does tend to erode away, and that's exactly what we ended up with here. I guess we can thank the Fed on Thursday afternoon for putting a little bit more into that break when they came along with some additional rules for the largest U.S. banks, limiting the buybacks that they can do and putting a cap on their dividends so that the money stays where it's needed within the banking system rather than going out to the investors. So, we take a look at where we are in terms of the market. This is that stretch we've talked about over and again of weakness mid-June through into August. You typically are going to be looking in an election year for the markets to go down and test support. We've got moving average support, which is really not that far away. It's now only about 3 or 4% below the market. However, if this is a slow erosion down, actually as we've been seeing, it'll take quite a bit to become oversold. We really need a few very bad days to put in any kind of a lasting bottom. And if we look back since the Second World War, there's only 2 presidential election years where we did not get a good oversold reading in the relative strength index. We use the RSI 14. You want to see that get down into the low 30s as far as the broad indices like the S&P or even the Dow is concerned. That's what you want to be looking for, and anytime now within the next 6 to 8 weeks, that's sort of the time window. It's wide open. We need to see a good technical reading to think that we've got a decent enough bottom in place. And this has been truly a market with a lot of diversity in it. You've got a few stocks that have been leading the way over on the NASDAQ in particular. Stocks like Shopify and Amazon, Apple, which have been putting in these new highs, and they've gotten in themselves into overbought conditions and are ready for probably corrections. So they give back maybe a quarter of the rally from the March low. But other sectors, like the financials, the XLF, they've had just poor bounces off the lows. We've had maybe 40 to 50% recoveries off the low, and they've already started down. They peaked out in that first week of June and have been gaining some momentum to the downside. So the weak ones will probably become much, much weaker, and the strongest ones, say, probably give back maybe 25% of the move that they've had up off the bottom.
One of the credit rating agencies downgraded Canada's triple grade A rating to AA+. What's the long-term implications of that?
Well, it was worth a hiccup as far as the market was concerned for the one morning that the news came down. I mean, is there any government really that should be given anything in the way of a rating that starts with an A? To me, it always gets down to the fact of what have we got in the way of our competitiveness worldwide. Clearly, we don't have that these days in terms of most of our products, and a lot of what we do have, we can't get moved. You take a look at oil, and even problems trying to move grain through our ports. So, I look at this as a currency that is under pressure. It did top out here back June the 11th. That's the day that the oil market, we watch the oil and we watch the CRB index, Commodity Research Bureau index. They got up into overbought positions. We had a sequential 9, which was a sell signal on the oil, and that then has a clear effect over on the Canadian dollar. That was the top on the dollar. A week ago, oil had topped at 40, came off a little bit, then went back to retest the high at 40, and the Canadian dollar could not participate in that rally. So once again, sign of weakness relative to the commodity action, where it usually, to have a good upside move, it needs to move with those commodities. And in this case, it didn't. We closed off the week down around, 73 and change. And this has got, I think, a fair amount of running room to the downside. There's nothing there that seems to be supportive to it.
How's gold doing?
Well, gold's had a pretty good week. Closed up at the highest levels that we've seen as far as the rally out of the 2016-2015 bottom. We're getting to a point seasonally where if we start to see strength in July, if it starts to put on some strength there, it really can gain a little bit of momentum to the upside. What I don't like is the fact that the miners are underperforming here. You take a look at the big names in the GDX. They are well off the highs that they put in a couple of weeks ago. And if we take a look at the ratio of miners divided by gold, it's clearly underperforming. Now, I think this is probably, twofold. We've got a weak equity market, and the miners had done a fairly reasonable move off the bottom. But with this divergence, typically in the miners, you'd be looking for at least a 20% sell-off there before you'd want to be aggressive. Personally, I think if they gave up something closer to 30% off these recent highs, that would be worth looking at. You take a look at other times that we were in good bull markets in the gold, like coming out of the 08 bottom, when everything got hit right into September, October. Gold got a hit, the miners got hit really badly. They all came out very nicely into early 2009, and then the miners did what they're doing now. They showed some underperformance, they had a correction, and during that process, bullion just basically went into a small consolidation and then started back up again. Did well into 2010. The miners got back on board after their correction. They then had another divergence and a correction. And then we had that final run in bullion up to 2011 when we were up to $1,920. So gold may be capable here of rallying independent of the miners, but if you are trading the stocks, you want to make sure you're a little bit more nimble than you might be with the bullion.
Ross, thank you so much for chatting with us.
Always nice to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at chartsbyross. Coming up, Marc Faber next on This Week in Money.
Always consult your investment professional before making any investment decision.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Marc, welcome back to This Week in Money.
Well, thank you very much for having me on your program.
Marc, how are things going at the Gloom, Boom, and Doom Report?
Everything is fine, thank you. We're still alive. And I have to say, the lockdown around the world did not touch me very much, because I'm in a fortunate position to live in a large house on a large piece of land and having next door to my house a large office building. So my life hasn't changed that much. The only thing that changed is I cannot go to bars anymore. They were all closed. But I had reduced my night outings to 3 times a week from every day. So now it's no more going out. But it gave me the opportunity to clean all my office and to clean all my books, which I hadn't done in 40 years. And which is a mistake, because leather-bound books, you should grease them, wax them every 2 or 3 years. So it had some advantages for me.
Marc, this week, Fitch lowered Canada's bond rating from AAA to AA+. The rating agency said pandemic lockdown measures and depressed global oil demand will cause a severe recession in the Canadian economy. If a rating agency is saying this, how long and how severe a recession could Canada really be facing?
Well, that depends to a large extent on Canada itself. Canada has, in my opinion, one major problem, and this is the household sector is over-leveraged. It has borrowed too much money, and some of it has been guaranteed by the government. The mortgage market is basically guaranteed by the government. And so I think that, like the US and Australia, also Canadians will have to tighten their belts.
In Canada, some mortgage payments and rents are being deferred. Is this a canary in the coal mine for the Canadian real estate industry?
Well, I think that globally there are huge changes that will occur in real estate. I think the coronavirus has exposed the danger of living in high-density agglomerations. I would consider Vancouver and especially Toronto to be relatively high density. And so what will happen worldwide, in my opinion, is that city centers will have declining real estate markets, partly also because corporations have discovered that a lot of people can work from home more productively than coming to an office. And most people who work from home nowadays, they actually prefer to work from home than having to travel in a subway every day or in a car every day for 40 minutes to 1 hour to reach an office. I think most people, they love to go to an office maybe once a week, not because of the office, but because after office hours they can go drinking with their buddies in a pub. So you understand, I think real estate in city centers will be affected. It will affect also city center lives in the sense that if you had a financial center and millions of people came from the suburbs into the city center, they also went there for a coffee, for lunch, for a haircut, for a tattoo, for a massage, and whatnot. Now, this is going to shift, and I think the real estate that is desirable is actually real estate in the middle of nowhere, because that is much cheaper than in the city centers, and people will feel safer also because of the current ongoing riots. So some real estate will go down and some real estate will go up, because nowadays, thanks to the internet, the telephone, and all the communication facilities, we can work from anywhere in the world. I sit in Chiang Mai, it's a rural area basically, but I have my Bloomberg, I get all the quotes right away, as if someone were in New York.
Your thoughts on the Canadian dollar?
Actually, my thought is not just on the Canadian dollar, but on the US dollar. I think the US dollar is currently one of the most overvalued currencies, and I think it has a rather substantial downside risk. And therefore, I'm relatively positive about the Australian dollar, the Canadian dollar, and even Latin American currencies that seem to me to be undervalued after having fallen by up to 25% over the last 12 months. So I'm bearish about the US dollar. I think the Canadian dollar should be okay. I'm also saying this because I think eventually the current fiscal and monetary policies will be inflationary and highly inflationary, but maybe not right away, but a few years out.
With all the turmoil in the world, could a summer rally be in the cards for gold and silver?
Well, I think I explained already last time, relative to equities, gold has performed very well. We're up 16% this year. So I think this is a very good performance in US dollars. In other currencies, we're up more, whereas in gold, we're up 16%. In most stock indices around the world, we're down 15 to 20%. So I think that gold has performed fabulously in the context of asset prices having declined. Having said that, I'm not sure that gold will go much higher in the near term. There are pundits that think that gold is vulnerable here and that it could go down significantly. Yeah, I think a correction of 10% is possible. I think whatever you buy in life now, if you look at the Robinhood traders, the stocks they buy and sell, they fluctuate by 10% a day. So gold will obviously also have volatility as well as silver. But I feel comfortable with owning some gold.
Some are describing the Obama administration as the most corrupt in the history of the U.S. Is the growing awareness of that likely to affect the U.S. dollar or U.S. markets?
Yes. The U.S. has a very corrupt government. I think people will gradually realize that. I think they will also realize that their own governments are corrupt and incompetent, like the U.S. So I think from this angle, the dollar is maybe not that vulnerable. But the U.S. had a reserve currency, and I think that the status of U.S. dollar as a reserve currency, and this status comes along with being essentially an empire like Britain was before the U.S., and with military might and with prestige. The military might, who knows? The last few wars the U.S. led Each one of them was a complete disaster for the U.S., but the media, of course, covered it up. But the prestige of the U.S., if you travel around the world, the U.S. under first Obama and then under Trump has become a laughing stock of the world.
So far, the Dow has put in a V-bottom recovery. What do you see ahead for the Dow?
Well, I think that we have to distinguish three things. The economy, the leaders of the stock market, the FANG and related stocks, and then the broad market. Since 2017, the broad market without the FANG stocks is flat in the U.S. Flat to down. The FANG stocks, maybe 7, 8 stocks, plus semiconductors, they have driven the index up, and they have become very highly valued. It's like if you look today at the market, part of the decline is because suddenly Facebook became weak. It's down, I think, 7 or 8% so far in the session. So, the market is one thing, and the FANG stocks are another thing, and the economy is the third thing. The economy, in my opinion, and this is also my observation from life here in Thailand and in Asia, from a very low point, it will recover. But we will not go back to the previous prosperity that we enjoyed in 2017, 2018, 2019. That is finished for a long time. And one of the problems I foresee is that we have governments that have essentially spent huge stimulus money on the economy. In the case of the U.S., of the laid-off people, over 60%, according to a study, 68%, they get more money than if they worked. So there is actually no incentive for them to go back to work. Now we have an election coming up in the U.S. And the irony is that basically the Republicans are relatively fiscal conservatives. But under Trump, the Republicans have actually introduced some kind of basic income. Now, of course, people say, well, this is temporary. This temporary business is always the same. It becomes permanent. It's like QE1 was supposed to be temporary. It became almost permanent. And I think that this will be very bad for economic growth in the long term. It will also only be possible because interest rates are near zero. And I think one day when there will be inflationary pressures, or for other reasons, when there will be pressures on interest rates to go up, the Fed will not be able to actually increase interest rates. And that's why I'm ultra bearish about the US dollar. This doesn't imply that the dollar can't rally one more time to maybe new highs, but I doubt it. Much rather, I think the dollar will rebound a little bit and then tank. And tank massively, like in the 70s.
Where is all the money printing going?
Yes. It doesn't go. The money printing, this is what many economists and already Copernicus observed in the 16th century. When you print money, the central bank is not, doesn't know exactly where it will flow to. It can flow into spending, it can flow into capital investments, it can flow into savings, as an example. Recently, it's flowed mostly into cash, into savings, and into speculation. As you know, the number of small trading accounts in the U.S., or if you look up how many Google requests occurred about day trading, it's all up through the roof. So the money, instead of actually helping people, has led to home casinos. The people can't go to Vegas, so they have their own casino at home. They play poker online, and they play the stock market, and mostly in speculative stocks like Hertz and Chesapeake Energy, American Air, all bankrupt companies. So there's a lot of speculation, and this is what has happened. And I think also there are statistics. The four wealthiest people in the U.S., Jeff Bezos and Bill Gates and all these people, they actually made the most money from the coronavirus crisis because their stock prices went to new highs.
We'll have more with Marc Faber when This Week in Money returns.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Marc Faber in Thailand. Marc, what are you hearing about the flooding in China?
Well, in the world we have droughts and we have floods. And this has always been the case. I think it's a serious issue, but you have to understand, at the present time, to bash China is a favorite occupation of some media and some government officials and some people. Everything China does is wrong. If there are problems in China, riots, it's China that is behind, and so forth and so on. There is an incredible China-bashing community, and I think it's highly unfair. It borders racism, and certainly it's not conducive to global economic growth and global trade. That I have to say.
Are you bullish on China?
I think it would be a mistake for an investor not to have any money in China. China is going to be a huge market. The liquor company that produces Maotao in China is now the most valuable beverage company in the world, okay? Tencent, Alibaba, NetEase, these are world-class leaders. And I think you have to have some exposure to China. Unfortunately, right now, and this applies to everywhere in the world, the high-quality companies are not particularly cheap. So that is something to consider. But an institution in, say, 1900 should have recognized that they need to have some money in the U.S. You understand? Because that was the rising power. And today it's the same with China. I think people should have some exposure to China. So it's not a question of are you bullish about China or not bullish about China. I think China will do relatively well. Unlike the China bashers, actually I think that the Chinese government is relatively high quality because they don't have a democracy for everyone. But the people that are in the Communist Party, maybe 100 million people, are relatively well educated, unlike many voters in the US and elsewhere. And I think that looking at how the Chinese government functions, it's not dysfunctional the way it is in the US. I mean, I'm very bearish about democracies. I think democracies will fail. and will be replaced by, in some cases, unpleasant governments. I mean, don't forget, we had the Bolshevik Revolution, and the Bolshevik Revolution not only killed millions of people, but they also destroyed all the wealth. So, and they led to extreme poverty. So all these things can happen. And therefore, I think that China ought to be rather admired than always condemned.
Is Marxism being pushed around the world?
I just written a lengthy report about capitalism because, as you know, Joseph Schumpeter, the economist, was a great admirer of capitalism, and contrary to, let's say, Keynesian economics, which are stagnationists. In other words, under Keynesian economics, the government needs to spend all the time and intervene in the economy, otherwise the economy falls into recession. The Schumpeter model says that the economy is very dynamic, but you have to let it be. In other words, laissez-faire. And under this laissez-faire and free markets, some industries will fade away and be destroyed, and new industries will come up. But there's never any equilibrium. The economy is constantly changing and renewing itself through, as he explained, the creative destruction. But he also said, eventually capitalism is so successful that it will likely lead to socialism. And he gave a speech 1 week before he died in 1950. Actually, he gave it on December 31st, 1949, and he died, I think, on January 7th, 1950. In this speech, the title was The Road to Socialism. And he explained that because capitalism is so successful, there are some people that then want the security of socialism, in particular the intellectuals. And I think we're in this phase where capitalism has created a lot of wealth for a few people, but it has also left behind a lot of people. And these people want to destroy the wealth of the rich. And under Marxism, the problem is, as Russell pointed out, the philosophy of Marxism is a philosophy of destruction. You know, it doesn't build. It wants to destroy. It wants to elevate the proletarians, but it wants at the same time to destroy the bourgeois, the owners of capital. And so we have to be very careful with this philosophy of Marxism, because it will create a complete disaster. You understand? Someone could argue, well, we're not happy about the way the governments are run nowadays. I agree. Then we have to do something about the government and put government officials in jail if they do something wrong. But how many government officials have gone to jail? Hardly any. So I think this trend towards socialism, which, by the way, is partly supported by big corporations. You know, this Black Lives Matter movement has very little to do with black people and a lot to do with essentially dissatisfaction with the system. But this dissatisfaction with the system shouldn't be addressed by destroying historical sites, but it should be addressed by overthrowing governments, in my opinion.
Should the global economy have been locked down for a virus that has death tolls in line with the seasonal flu and pneumonia?
Well, I think that if we look at reality, the lockdown has done more damage than the COVID-19. And I think that a lot of people have lost everything. I mean, I have an example. I have a friend, he's not a close friend, but I know him. He opened about 5 months ago, maybe October, November, a restaurant. And he's not a rich guy. He's someone who was a chef, and then he came to Thailand because his wife is Thai. He opened a restaurant, and now it's been closed for 3 months. I mean, for him, this has been an unbelievable hardship. For me, who works intellectually and has a newsletter, the lockdown has not been an economic problem. But for many people, it has been, and I find it incredible that in democracies where we are supposed to be free, some really dumb bureaucrats and government officials can just tell you, you have to close your shop. It's ridiculous. So I'm very much against the intervention by governments. I think the interventions by governments have created much more damage than the virus itself. But the intervention of governments always create problems, always. That's why I prefer small governments, such as we have in Hong Kong, little interventions, and if you want your freedom, you have to assume responsibilities, and you have to also have a sense of duty. You cannot be free with a woke mentality. With the woke mentality that prevails today among most people, especially young people, you are doomed to bondage and slavery.
Are the lockdowns an excuse for the powers that be to destroy economies and pick up assets for pennies on the dollar?
Well, because of the money printing, it's very difficult to find terribly distressed assets. But I'd like to say that many markets in Europe and in emerging markets have been in bear markets since 2015. So you're talking about 5-year bear markets, and so some value has emerged. There are stocks that are very depressed, and I think an investor who has patience, he could say, look for distressed stocks around the world, and he would find a lot of them, and he could put, say, $500,000 or $1 million into 20 different companies. Now, some may go bankrupt, and some may go up 5 times. So I think there is an opportunity. Also, I think there's an opportunity in gold shares. I think gold stocks are reasonably priced.
Is bricks and mortar retail looking like an endangered species?
I think there still will be brick and mortar retailers, but not the same way it was before. I think, first of all, I'm not familiar with Canada, but the U.S., and I suppose Canada is similar, was grossly over-retailed. I mean, there was more selling space per capita than in any other country by a large margin. So I think that will not come back, and a lot of the retailers will go bust. But I suppose there still be in the world some luxury streets like les Champs-Élysées in Paris, the Bahnhofstrasse in Zurich, and so forth. So there will still be some shops, partly because a shop is nowadays an advertising, but more and more products, even luxury products, will be sold online.
Your thoughts on universal guaranteed income and work ethics?
Basic income is like socialism, and it will not lead to economic growth. It will lead to stagnation, and it will lead to also riots. I mean, part of the riots are because people have nothing to do. So they go out and throw stones at windows. I'm very strongly opposed against basic incomes. I think if people have a disability, I think society should support them to a certain extent. But we have statistics that say in 1960, babies born out of wedlock were relatively seldom. Maybe 20% of all births were out of wedlock. Now it's close to, in black communities, it's close to 70%. And then there are studies that show that children that are born to single mothers don't do very well at school and in life, partly because they don't have a family. And so I'm against all these programs that encourage the destruction of the family unit.
Do you think political correctness is causing the destruction of society?
Not the destruction of society, but it is very negative because it is essentially a destruction of freedom of opinion and freedom of speech. That we must realize. And it's the beginning. You have political correctness. In the French Revolution, they introduced the new language. They abandoned the calendar, and so forth. These are all symptoms of a totalitarian state. And to your listeners, I would recommend the works of Hannah Arendt about the totalitarian state, because that's where we're heading to. And I've seen totalitarian states from the 60s onwards in Eastern Europe, in Russia, in China. I can tell you, if people had lived in these countries, they would never wish, they would never follow Marxist philosophies.
Does it look like we're heading towards freedom or slavery?
Well, slavery, I don't know. It's not. I think people are enslaved through their debts. Their freedom has become very limited through the debts that they carry. And I don't think we're going to go to a system where you work for a family, as a slave. But you may work as a slave for the state, for the government. That is a possibility.
Overall, are you seeing gloom, boom, or doom ahead?
Well, I think we have to be realistic. The world changes all the time. We've experienced a big change in the last few months. The old order will not come back. And I think you shouldn't kind of be worried. When will the new old normal come back and so forth? You just have to adapt to the present situation and be realistic that this is maybe what will continue to be. No economic growth, no returns on your investments, higher and higher taxes, more and more intervention by governments until we will have possibly a revolution that overthrows governments. It happened in CAD, in Seattle. The result is a complete disaster. The result of the Bolshevik revolution and of Mao Zedong's victory over the nationalists was initially a total disaster. But this is the way the world works. We head from one disaster to another one because politicians never learn anything from history, because most of them are completely uneducated. And so we have one problem after the other, and we have to just live with it. That's why I recommend to own some gold and silver. Thank you very much for your interview.
Mark, always fun talking to you.
Thank you. Bye-bye.
My guest has been Marc Faber, publisher of the gloomboomdoom.com report. He was speaking to us from Thailand. Coming up, Ed Steer next on This Week in Money.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Ed Steer, the founder of Ed Steer's Gold and Silver Digest online at edsteergoldsilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from beautiful Merritt, British Columbia. Ed, welcome back to This Week in Money.
Always glad to be on your show, Jim, and good afternoon or good morning or good evening to all your listeners.
What are you seeing in the latest commitment of traders report for gold and silver?
There were increases in the commercial net short positions in both silver and gold, which were sort of expected because the prices certainly were up over the reporting week, especially in gold, and of course the numbers reflect that. There was an increase of about 1,500 COMEX contracts, or 1,800 COMEX contracts in silver, which is, basically a rounding error. It's not really a significant amount, so it didn't bother me. But the gold number was far less impressive as the commercials really piled in on the short side to prevent the price from rallying any more than it already had. And they increased their short position by 29,000, a little bit over 29,000 contracts, which is 2.93 million troy ounces of paper gold. So that's how much gold they had to sell in the paper market to prevent the prices rising more than they did. So it didn't make for happy reading, but the numbers weren't expected because as the price goes up, they step into the market as short sellers of last resort from preventing the prices to blow sky high. So the numbers were as expected. Not happy reading in gold, but what can you do?
Are the big shorts still shorting silver?
They're short in silver. They're short in gold, as I just pointed out. Silver, one thing I can tell you, I figured the numbers out here before we went on air. And right now, the big 8 traders in silver are short 385 million troy ounces of paper silver, and that's 165 days of world silver production, which is about 5.5 months. And the big 8 traders in gold, which are all commercial banks or investment houses, they're short 22.51 million troy ounces of gold. So, and they're short in the platinum market the same amount. They're short in the palladium market. They've been short against all the 4 precious metals like this for the last couple of generations. This is not something that just popped up in the last year or 2 years or 5 years or 10 years. This is an ongoing price management scheme that's been going on since the early 80s.
So is there still a physical shortage of silver?
Yes, and gold too. On the retail level, you go to any of the bullion dealers online and look at the delivery times or what they have available for sale. What they have in physical inventory to sell is like 2 or 3 items, maybe half a dozen. And everything else is either sold out or has waiting times for delivery of, anywhere from 3 weeks to 2 months. So there's a huge physical shortage of both silver and gold at the retail level. The demand is there, but the supply, the mints and the companies that produce this stuff, just cannot keep up. And I'm not sure whether they can't get the metal or they're just overwhelmed by production. But this has happened before. Every time you get a big rush into the precious metals, supply lines for buying this stuff are very long and very thin, and they get cleaned out quickly. And this situation has not changed at all.
Are people paying a big premium, or are they patient enough for it to be delivered, say, months down the road?
Yeah, it all depends on the buyer. I was in the retail bullion business in Edmonton at MRCS Canada for 4 years. And some people are prepared to pay the money up front and wait and get it for a cheaper price. But some people just want it in their hand right now, and they're prepared to pay big premiums. And I can tell you right now that any retailer that's got silver or gold bullion to sell right now over the counter, there's a big hefty premium on it.
Could we be in for a summer rally in gold and silver stocks?
Well, of course, we could always be that. The thing is that you have to remember it's the 8 large traders, all investment houses and bullion banks, that are short record amounts of gold and silver. I talked to silver analyst Ted Butler on the phone before I went on air, and these 8 traders are short something over $9 billion in margin calls right now in realized and unrealized losses. And it's entirely up to them whether the price rises or not. If they stop selling short, as everybody else is going along, of course we're going to have a huge rally. But they're protecting their short position, but they're digging themselves a deeper and deeper grave all the time, and sooner or later they're going to have to capitulate. So there could be a rally anytime, starting tomorrow. It could have happened today. We had a big sell-off this morning, and then it came roaring back, and they stepped in again to prevent it from going too high. There could be a rally anytime. It's just these big 8 traders that are the cork in the price bottle. And this, all the price rises and rallies we've had over the last, 30 or 40 years have been despite of that, not because of it. So, it could rally at any time, and these prices should be orders of magnitude higher than they are now if they were allowed to rally.
Is the U.S. dollar still playing a big role in the prices of gold and silver?
Well, it's still a factor. There's no question about that. It should play a bigger role because they're both units of finance, and they're both money if you want to look at it that way. So if the dollar's going down, the price of everything else, including silver, gold, corn, wheat, sugar, whatever you want to, every commodity should be going up and down vis-a-vis the U.S. dollar or everything that's priced in that currency. But like every other market out there, I don't care whether it's the stock market or the bond market or interest rates or the price of gold and silver or crude oil or what the heck it is, there are no free markets. They're all managed. Everybody knows that the stock market's being managed, the interest rates are being managed, and the currencies are being managed as well. So does the U.S. dollar play a role? Yes, at times it does, but, like every other market, it's not freely traded either.
We'll have more with Ed Steer when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Ed Steer. Ed, what's happening in physical versus paper, gold, and silver?
Well, that is an interesting question, isn't it? We've covered the paper aspect of it already. Like I said, the 8 large traders, all of them banks and investment houses, have been shorting the snot out of the precious metals in the paper market for the last 30 or 40 years. But in the physical market, things are entirely different, not only at the retail level, but when you start looking at all the ETFs, mutual funds, and depositories in the world, the amount of gold and silver piling into them is absolutely off the charts. It has become almost parabolic in the amount of money that's being spent buying physical metal in those funds. They're having no trouble getting it at all. It's just record amounts as the rich and the powerful and the powers that be and the deep state players that know that the financial system is basically done for have been piling into this stuff almost relentlessly, especially starting in January 2016. It really began, the investment dollars really started to flow into the precious metals then. But in the last 3 or 4 months, it is, like I said, it's just gone parabolic. It's just incredible to watch the amount of money that's being spent in the physical market in all these ETFs. Is
there any way to calculate just how much is being spent?
Yeah, I post the numbers on my column every Saturday. If anybody who's a subscriber, I post the amount of gold and silver that's going into all these funds on a weekly basis, and the charts are there so that people can follow along. Plus, I report in my column every day the amount of gold going into all the ETFs and mutual funds on a daily basis as well. So I have all that information in my column every day. It's available. The reason most people can't find it on the internet is that if you want that information, you have to pay for it. And because I have a subscription-based service, I feel it's my duty to provide that information, and it's there in my column every day.
How are the Huey and XAU indexes looking?
Well, they're doing okay. I mean, they're just following along with the gold and silver prices. The unfortunate thing is, of course, we're approaching new highs in gold, and the Huey, the gold stocks aren't doing anywhere near as well as they should be doing. That's the same with the silver stocks. Matter of fact, the gold stocks are up about 10 or 12, 15% on the year, but the silver stocks are down 10% on the year. And they should be doing far, far better than they are right now. And the problem is, the prices are being suppressed in the precious metals, and all eyes are on the stock market. Everybody's buying Google, Apple, and all these other companies. And until the mania stops in these paper markets, like the Dow and the S&P and the transports and the bond market, and some of this money starts flowing into the stocks, then you're going to see the stocks take off, of course. But what's happening is the really, really big money is buying physical metal, and you can see that in the ETFs. But sooner or later, and sooner rather than later, as far as I'm concerned, as far as all your listeners are concerned, some of this money is going to start landing up in the equities as well, and there's no bull market like a gold bull market in stocks.
How is the gold-silver ratio looking?
Well, as everybody knows, it was up around, 125 to 1 or 128 to 1, 2 or 3 months ago. It's back at 100 to 1. It's been varying here for the last 2 weeks, somewhere between 98 to 1 and 101 to 1. So it's still ridiculous. It's absolutely ridiculously high when you consider the fact that gold and silver come out of the ground at a ratio of 9 to 1. So it's, the ratio is 10 times that amount. It is absolutely, you can see how badly the precious metals are being managed just by the ratio of the stuff coming out of the ground. And the silver price and the gold price have never really been freely traded, in the last 100 or so years or 200 years, ever since it became money. And this index is totally out of whack. And even if we went back to half of that, that would mean that, gold would go up, but silver would go up 4 or 5 or 6 times. And, that's certainly within the realm of possibility. And I expect that to happen at some time. So the gold-silver ratio is a total fantasy.
Are you bullish on gold and silver short-term and long-term?
I'm bullish on a short-term, medium-term, long-term, and as long as I can think of in the future. Everybody should be. This is the next big thing, and the only thing that preventing it from happening is these big 8 traders. And I can tell you that someday they're going to either get overrun or going to be forced to buy back their short positions, and then the bull market for sure will be on. So I've been all in for the last 10 or 15 years. Every nickel I have is in the precious metals, either in the physical metal itself or in the shares. And so I'm as just wildly bullish as you can possibly get.
And is it frustrating to know something like silver, which isn't just a precious metal, but also an industrial metal, which means it gets used up, that the price hasn't gone up as much as it hasn't?
Well, that's certainly true. I mean, if you take I'm just going to segue into something which I wasn't going to mention, but I will mention it now, is that in the last, 2 or 3 or 4 months, I think the last 3 months, there's been something like 270 to 300 million troy ounces of silver that have gone into all these ETF mutual funds and depositories. And the only place you could get that kind of silver is the 1 billion ounces that Ted Butler says that J.P. Morgan has. So he's written a couple of stories in the public domain about that J.P. Morgan is actually leasing this silver to the banks, and they're selling it to these ETFs. So that's where it's all coming from. And, if the price demand thing was allowed to work, silver would be astronomically higher by now, but J.P. Morgan is, like Ted says, leasing this silver, and of course, if you lease it, it doesn't have any effect on the price, and that's why the price in silver has gone absolutely nowhere.
Ed, how can people find out more about your newsletter?
Well, they can just Google my name. My name is Ed Steer, S-T-E-E-R. My website will come up in the search engine, and you just click on the link. And on my homepage, you'll find a tab that says Sample Column. Just click on that, and you'll see what you get as far as a column goes. And I publish one every working day of the week, so there's 5 of those. So it's about 260 columns a year they get for $100 US.
Ed, thank you so much for being on This Week in Money.
Always my pleasure, Jim.
My guest has been Ed Steer, the founder of Ed Steer's Gold and Silver Digest, online at edsteergoldandsilver.com. He was speaking to us from Merritt, British Columbia. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Marc Faber, and Ed Steer. And thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Hi, Jim. It's looks like a great weekend coming up.
And at the offices there, still very busy times?
Oh, yeah. We've been extremely busy over the last, ever since the coronavirus hit. We've been really busy on emails and contacts and conference calls and on and on and on. But the reality is, it's all been good work. Time has flown by, and this is probably the quietest week we've had, which is still very busy.
Larry, how has the work with the pilot plant been going, and what kind of results? I know a few weeks ago you were saying you cranked it up to twice the expected volume, and it worked?
Oh, yeah. It was actually close to 3 times the volume, and the 64 kilograms per hour, 2.5, let's say 2.5 times, and but that introduced some heating problems and other things that we had to fabricate other equipment, and we're still waiting for delivery of that. And I'm hoping that's back on track very soon. We purchased the equipment, but we're still waiting the arrival of it. So it's all good, though. It's once we get this done, that'll sure clear the decks for a detailed engineering plan.
Larry, what kind of new projects do you have online, or can you tell us about it?
New project?
Yes. What kind of developments are you working on?
Well, the next step after the optimization of the pilot plant will be to redesign the size of the potential commercial plant, which will probably include a doubling of the size. And so that's our next big step. But there's always stuff that's happening. We have certain things on the table that could close at any time, and that's unexpected. I can't give you timelines on that. I get every once in a while I get some obscure shareholder that has never contacted me for looking for insider information on that, but all I can tell you is that the only insider information that's available is exactly what I just said. We're waiting for equipment, and once that's here, we'll start up the plant, and there will be an announcement on that. So that goes without saying, but I just wanted to say, Jim, that we did a recent OPED on manganese and the criticality of manganese to the U.S. government. And that OPED has been well received. As of this morning, it was
57,000 reviews, which is, the second highest we've had, and it's still ongoing. So, we're well over 200,000 reviews on the OPEDs that we've done. This is number 4. And so, I've never received such a great response in my history of running public companies. So that's tremendous, and I hope that these people will, if some of them have already probably become shareholders, I hope they will become shareholders if they're bench sitters once we progress the company a little bit further. So that is happening. We've got lots of other things that we'd like to talk about. I've included an article on Elon Musk in his youth and when he arrived in Canada and then went to university in the U.S. and it's an interesting read. It looked like an impossible road ahead of him. And look at him today; he's worth about $40 billion. So that tells you something about ambition and determination. And I think that's a good read for everybody. It's enlightening, and that's one of the aspects that we've been talking about. So we're still looking forward to Battery Days, which I now understand is up to September the 15th. And we're hoping that he mentions all aspects of the battery industries, which include recycling, but we have no information whether that will be done or not. And but it would be nice. We've continued to do work for the Tier 1 companies, and we're just waiting for feedback from one of them. So that is ongoing. And, we've been approached we get approached every day on financial opportunities, but most of them, you check into it, would probably end up in a non-event, so I don't talk about those very often, but we do have some serious players in the field that are looking at us, and, there's no names because I don't know what's going to happen. Everybody wants to go into an NDA today, and, it helps. It doesn't help when you're trying to promote the product that you have, that you may be talking to companies that household names, and yet you can't mention it. You're in conversations, or you're in doing work for them, or whatever, because of the NDAs. So that is it's very heartening to see all those things happening within the company itself. But it's unfortunate that we can't put that out to the shareholders, that actually there are some big companies that are interested in what we're doing, and that will happen when it happens, and it'll probably be because some deal will be made. But we're still very optimistic going forward. We can't see any other technologies out there that can do what we're doing. We basically have focused on a closed circuit answer to recycling of batteries, where nothing goes back into the environment. Nobody else does that. Matter of fact, they're very vague about what they do. And maybe transparency used to be very good, but maybe transparency is not where you want to talk about anymore. Maybe it's better to keep everything secret and let rumor run the market. I don't know. But we want to be transparent, because we're not just talking to investors. We're talking to potential partners and potential off-takers, that sort of a thing. So it's transparency is the word of the day, and and that's what we'll continue to do: be transparent about everything we do. And there's a lot of interesting things happening. There's a lot of bullish reports on EV batteries, EV cars, projections of recycling, and I've seen up to $15-20 billion a few years out from now, and wow, that's a huge business, and it's, for one company to think they can corner all that, so all we have to do is corner 10, 20, 30% of that, and we've got a huge company. So that's what I want people to keep in mind, that batteries do reach the end of life, and there's reuse, but that's just tying up more expensive commodities on a storage unit that you really don't need, all the nickel and everything else and cobalt that's involved in those batteries. It's best to get it back into play, and eventually you can start to balance the books with the mining. That mining will still take care of a lot of the need for critical metals, but the fact is that recycling will start to replace a lot of the mining over the next few decades, and that's a good thing because that's less disturbance to the environment. So, we're really happy with everything that's happening, Jim. It's not a great market right now. We're down 600 points today, but that all said and done, we're trading up on the day, and which makes me very happy. And it's one day we'll get the traction we need to start to push higher. And just to let everybody know, when we're looking at financing, we look at partnerships. We look at a certain amount of placements, selling shares, but we're starting to lean heavily towards debt financing because we can see that that should be able to be paid back in a reasonable amount of time. So I'm all for debt financing. That's something that I've avoided over the years, which has been great because when markets crater, especially with commodities, the commodity price craters, then the companies find that they got debt they can't service, and everything goes away. And we don't want to see that happening, but we're looking at the risk on battery recycling as being considerably different than a mining operation where you're totally dependent on the commodity price. And we've seen the commodity price retreat significantly for the recycling, and yet we can still see, from our own work in here and our business plan, that it's still, robust. So we can go from there. We'll have a lot of attachments with this podcast. Certainly, I'm excited about the fact that we've had over 200,000 reviews on our OPEDs, which means that maybe at least 30 or 20 or 30% of those are new reviews from different people over that period of time. Certainly some are going back and looking and opening reviewing the podcast maybe 2-3 times, but it tells us that we're on the right track.
Larry, where are you traded, and where can people get more information about American Manganese?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded in the Frankfurt Exchange under the symbol 2AM. We have a great website out there where you can do all the due diligence that you need to do, called AmericanManganeseInc.com. You can always contact me at LREAUGH@AMYMN.com, or give us a call here at the office at 778-574-4444.
Larry, thank you so much for the update, and have a great Canada Day.
And you too.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on June 26th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thank you very much, Jim.
You guys cranked out a news release earlier this week. What was in it?
Well, we finally did get a news release out. It's been a long time. But it's our plans going forward for the season, and basically said that we will be boots on the ground first week of July, and we're splitting the season into two parts this year. The first part will be field crews going in, I think there'll be 4 to 6 of them up on the new camp will be up top. We're permitted for no more than 8 or 10 people up there, so that's where they're going to be, and they're going to be doing a lot of field work, prospecting, mapping, sampling in areas, specific areas that we've identified with all the data over the last couple of years, drill data, and the geophysics. And what we see now, we've got a pretty solid-looking theory about the structure, which has always been a bit of a mystery to us. But they're going to go in there and do that, and if it takes a month or 2 months, whatever, that's so be it. They're going to fine-tune these theories we have, the targets that we're looking at right now. They're going to fine-tune those, and then along the way, probably come up with more targets, so that when they're done, and that the latter part of the second half of this program we'll be looking at drilling. And one of the reasons we're doing it this way, just so people understand, is to keep the camp population to a minimum, because of the coronavirus. And by doing it this way, we can keep a relatively small camp going for the first part with the field crew, because that'll be relatively small, and then the drill rig and everything and the crew involved there, and plus the core shack crew and all that, it's much bigger when you add it to the geos. And we'll move the camp at that point back down to the Bob Quinn airstrip, where we've got a couple of trailers to handle all them double wides. So anyways, it's going to be an interesting season for us too, because we haven't really had the time to sit back and do actual field work and help guide us and basically help evaluate drill targets that we've got in mind for us.
With a shortened season, does it help you give you more time to be more concentrated, have the plans ready to go, so the fewer number of people have a really concentrated plan, kind of like astronauts when they go into space? They have a lot of things to do in a short period of time.
Yeah, well, that's not a bad analogy. Yeah, these guys are going in with set plans, and they're going into specific locations. And for example, they're just at the south end of the north boundary zone. There's an area there of very keen interest. We haven't tested it yet with a drill, but we thought we'd go in there and do some surface sampling, because we've got some downhole mineralization, and we've got some really good-looking geophysics right there. And it's a large zone, and we haven't gone over on the surface before and taken samples. So that'll be a priority. And then, wherever there's a deflection in the fault system, that either the Nelson Creek fault, there's a deflection to the northeast. That's right where the north boundary high grade zone is, and then we've got some other areas of deflection that are very similar, and they go to the northeast. We've got a new fault zone to the south, it incorporates the south boundary plus south of that what we call the benchlands. And that fault system has mineralization. It controls mineralization that we were hitting last year. And, even though they're 500 meters apart, the benchland and the south boundary, it's the same mineralization. It's the same rock even. So it looks eerily like the north boundary, the high grade zone. So our thinking is that fault actually connects up with the Nelson Creek Fault, which is up by the North Boundary Zone. And that's something we're going to be looking for, too. And then there's cross-cutting faults off of that that are also key to the mineralization on the North Boundary Zone. So, when we see another fault like that, that's something we're going to go after. And, highly targeted surface sampling.
For people new to Aben, what's the company about, and where is exactly all this action taking place?
We're a gold exploration company. We're located. This project is located in the Golden Triangle, northwestern British Columbia. It's a pretty prime area of the world for exploration for gold. It's got a lot of history behind it. There's some new production going on up there with Bruce Jack and Red Chris. There's lots of past producers, Snip and Eskay Creek and the Premier Mine, and that whole region is just amazingly mineralized, and in many respects just waiting for the price of commodities to come back up and kickstart. There's a lot of large deposits there, especially large copper deposits. Some of the largest undeveloped copper deposits in the world are sitting up there waiting for a copper price to make sense. And I don't think we're far from that, to be honest with you. And as far as gold goes, some of the highest grade gold mines in the world were found up here. And some of them are being resurrected right now. So, it's a prime location.
And where is Aben listed?
Aben Resources is listed on the Toronto Exchange under the symbol ABN. That's the TSX Venture Exchange. It's listed on the OTCQB down in the States under ABN-AF, and it's listed in Frankfurt under the symbol E2L2.
And your website?
And the website is it's brand new. Please go check it out. It's got all the plans what we're looking at going forward and why we're looking at these areas. So the website's abenresources.com.
Jim, thank you so much for the update.
Thank you very much.
My guest has been Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. Our conversation took place on June 24th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.